We have Kunal Shah of ICICI Securities who also joins into this discussion. Kunal, this has been a very, very challenging quarter, right? Especially for the banking industry, for the banks that have had exposure to some of these companies that have been in very challenging sectors. So what are your own expectations? What are the key internals to track? And which would be the stocks to watch?
Yeah, so this quarter actually it's going to be a quarter of narratives rather than the numbers. So we will be on a path halfway through the normalization on few of the parameters, be it something like origination, collections and all. But it will be just the beginning of the journey as far as stress recognition is concerned. So we'll have to see in terms of what the bank's commentary are with respect to restructuring, be it in terms of the quantum or the nature of the restructuring, and also how the slippages are, particularly from SMA 1 and 2 pool, or maybe if some banks prudently recognize the stress upfront. So these two will be the key parameters which will finally flow into the provisioning build-up. So for the sector as a whole, we are expecting that the operating profit growth could still be there on an year-on-year basis. But because of elevated credit cost, we would still see the earnings decline. The only thing is because of the tax advantage, optically PAT would look higher, but earnings before tax would definitely be on a decline year-on-year.
Okay. Well, actually, that was the main question I'm trying to get with both of you. We are a little confused. Reserve Bank said in its stress test that NPAs could go up to 14.7 as a bad case, and as a base case also some 12.7 or something, which is much bigger than the 8.5 that we have as NPAs as a percentage of total assets as of June 30th. So, but the banks tell us only 10% took moratorium, 9% took moratorium, very few are going to ask for recast. It's the two pictures are not gelling at all. Therefore, Prakhar, and I'll come to Kunal also on this, how are you going to choose stocks? Can you guide our investors as to what they should look for?
See, Lata, in my view, the most important aspect around judging whether we are on the right track is to look at collections number, both for banks and for, the NBFCs. By the time most of these guys would report, we would have 1.5 months of post-moratorium period. And if the collection number is respectable, we should be relatively relieved that we are not going down a very tough path. The proof of the pudding litmus test is all lined up for January. So January, in my view, that's what I've always maintained. That's the litmus test. But this quarter, we need to check if we are on the right path, and collections, in my view, will showcase whether companies are fine or not. And so far the commentary from the bank and many of them who have come on your channel also have been that collections etc. have held up much better.
Exactly.
One thing need to really commend the corporate sector also for it is despite all the lockdowns, we haven't seen much of white collar job losses. They've held these people in pain during the pain. Yeah. And not necessarily that people are waiting to take salary cuts etc. So I think that's something really commendable for the corporate sector to have held up.
Okay, well actually CMI reports told us of job losses, and there is some Okun theory that if there is 10% output loss, then 5% is the job loss. I don't know whether it works for India. We don't have so much labor data. But I'll come to you for some vague idea as to which banks you would look at as positive. But first, Kunal, to you, since you started that, you exactly put your finger on it. Would you also look at collections and give us some idea of where you are placing your confidence, in which banks?
Yeah, so definitely the trend in collections is going to be of prime importance, and across the board and across the product segments, we are seeing month-on-month improvement. So where do it finally settles, that is what we need to see. However, the clear picture is going to emerge post Q3 because we would be just 1 month out of the moratorium. So finally, be it in terms of the recognition, and even the restructuring deadline is there up to December. So finally, Q3 will give a much clearer picture. But I think overall trends of collection is something which we would be seeing it out. And most of the banks have been highlighting that restructuring is also going to be a relatively lower number. Say some kind of a low single digit is what most of the leading banks are highlighting currently. So maybe I think slippage plus restructuring, at least for Q2, is going to be modest, and finally we will see as to how it pans out post Q3.
Okay, so since HDFC Bank is the first one that reports its numbers on Saturday from the sector, I wanted your thoughts here, Kunal. I mean, this is a stock that has gone to 1200, I think, in less than 2 months from the lows of September. It's seen a big move. What are your expectations here, and what is the advice to investors for some of these large caps like HDFC Bank?
So HDFC Bank all through have been very resilient and confident with respect to their asset quality performance, and finally it seems that's going to reflect in their Q2 earnings as well. So their Morat 2 pull also settled at 9%. And finally, in terms of the restructuring, that is also expected to be much lower in the single digit. So I think finally, when we look at it, the business numbers which they had come out with, in fact, it's still 16% year-on-year growth for them. And with more or less stable kind of margins, we should see more than 15% NII growth for this quarter on a year-on-year basis. And even in terms of the operating profit, it could settle, say, in the low double-digit kind of number. So relatively, if we have to look at it in terms of HDFC's number relative to the other banks, it's going to hold on pretty well in terms of year-on-year growth, and that continues to be our top pick as well within the sector.
All right. Well, Prakhar, can you give us some broad idea of what would be your picks?
Sorry, there's
Sector,
some network.
you can't.
So we've generally avoid giving stock names, but broadly we've been positive on the larger companies where either the deposit or the funding franchise has been holding up much better, and in our assessment they stand to gain because hopefully we are not feeling too much of a pain from asset quality, but there will be a long drawn consolidation and a market share shift cycle. So both from a near as well as medium term perspective, we remain more constructive on the large cap financials.
Okay. All right. Actually, gentlemen, we could have gone on a bit, but the telecom lines are not obliging today. So thank you very much for giving us an idea as to how we should look at the banking stocks when they start announcing numbers. The first one comes out on Saturday. That's HDFC. But I think today we have to look at the new listings. It's past 10.